screen? No. So, Mr. Matthew,
hello,
please,
good evening.
you can
Good
go
evening.
ahead.
Can you hear me? Can you hear me? Good evening. Hello.
Yeah, hello.
Yeah, we can hear you. We can hear you. We can hear you.
Okay,
Yes,
good
please, we
evening.
can hear you. We can hear you.
Okay, so I'll be taking you on spot trading, futures trading. Please kindly mute your mic.
Okay.
Kindly mute your mic. Okay, so I'll be taking you on spot future trading and technical analysis. So I'll be starting with spot trading. Spot trading is the art of buying a financial instrument or asset, such as cryptocurrency, stocks, or bond. Spot trading is a place whereby an asset is being purchased in anticipation of the value will increase, and you trade it off and make a profit of it. Spot trading majorly takes place in centralized exchanges such as Binance, KuCoin, Huobi, Binance, KuCoin, Huobi, and Coinbase. So I'll be very brief on this section, and I'll be sharing my screen shortly on how to buy your asset on the spot market. Please make me host. Hello, sir. Please make me host. Hello. Hello. Hello.
Okay. All right, I've done that. I've done that.
Okay.
Yeah, you can now share your screen now. You're a host. I think so. I've made you a host, Mr. Matthew.
Okay. Okay. Okay, so we are on the spot section of the Binance. Now, in the spot section, first you need to have your USDT on your spot section. And in the spot section, we have buy or sell. Before you choose a particular pair you need to buy, you need to go to the search button. Maybe there's a signal for BNB USDT, or there's a signal for Gala USDT. You just have to go to the search button. You type on Sol, for instance, if it's Sol USDT. You click on so, it will now appear. Okay, let me add some people on the waiting room. It will now appear. You now have your Sol USDT. It's basically, okay, hold on. So, keep coming in.
Mr. Matthew, we can't hear you. Your mic is muted.
My mic is not mute. Can you hear me? Can you hear me?
Yeah, we can hear you now.
Okay. So limit order is it's an order. Please make me host.
Yeah, go ahead, please. Sorry about that.
Okay. So limit order, it's an order whereby you set to buy your asset on a later price. If there's a signal sent for buy, Sol USDT at 20.0. All you need to do is to come to here, you have below here, you have limit. You click on it and you wipe it off. You simply input 20.0. You choose the quantity of SOL you wish to buy. You have 49.8. Assuming you choose to buy with 50%, all you need to do is you click on 50% and you click on buy. Successful. But since it's a limit order, it will not be executed until such a time when price move from 16.39 to 20. At that point, that is when the order will be executed. Then, okay, so OCO order, trailing stop, stop limit are orders that are not too important for spot traders. OCO order is one order cancel the other order. This is just the basics. So there's no point dwelling so much on this. So spot trading is a trade, it's a trade whereby you buy your asset and you expect it to appreciate, then you sell off later. Then let's move to futures trading. Futures trading is a derivative trading, whereby you buy the futures contract. It involves using of margin. This requires the use of leverage. It could be 5x, it could be 10x, it could be 25x, it could be 125x. The leverage is a double-edged sword. Whenever the trade is going in your favor in the futures trading, you make times 10 of the leverage you're using. If it's going against you, you lose times 10 of the leverage you're using. So let's get to the futures. I already have a running trade on the futures. This is how to place the futures contract, a futures trade. You come here for Gala USDT or BNB USDT. All you need to do is to click on BNB USDT. Now, in the futures contract, we have what we call the perpetual contract and the quarterly contract. The expire at every 6 training. We'll dwell much on it. You see first, perpetual contract. Can you see my screen? Hello.
Yeah, we can see it. We can see your screen.
Okay. So the BTC perpetual contract and the BTC quarterly contract. The quarterly contract, as the name implies, quarterly have an expiration date where the contract expire. The perpetual contract is continuous, it doesn't end. So if you have a trade, if you want to place a signal all you need to do is go to the search button, click on a particular pair. It could be ETH USDT, could be BNB USDT, ADA USDT, and you're looking for perhaps ADA USDT. You click on ADA, you click on the perpetual contract. You click on isolated. We have two types of margin, isolated or cross margin. For the isolated, I have $34 in my Binance account balance. So if I'm using the isolated margin, what it means that I already have an existing trade minus 6%. Now, my margin here is 15 USDT. And if this trade is going against me, and I'm not using stop loss, what it means is, if it's unisolated, Binance will not take money from my 34 USDT to keep this trade on. It will get to a point whereby my liquidation point below here, it's 18,021.93. If it gets to this point, I will be liquidated. That is if I'm using isolated margin. But if I'm using cross margin, I need to click on here, click on add cross. But since it's already on isolated by default, my own setting, I cannot move from isolated to cross since I have already set my isolated margin. But if I am on isolated margin, I will be liquidated once price gets to 18,021.73. But if I'm using cross margin, you click on cross, you click on isolated, then click on cross. What the cross means is, I am on this trade. My margin is 15.16, below where you have the minus 6.70%. 15.16, that is my margin. So what it means now is, if this trade is running against me and I'm on cross margin, Binance will come and take money from my 34.64 USDT to keep servicing this trade until such a time that eventually I'll be liquidated. But it's better for the purpose of risk management. You set your margin on isolated such that you are using 10% or 5%, 20% of your equity, as the case may be. You already have a defined amount of money you wish to lose. And when you set your stop loss, once price gets to that point, the market will automatically hit you out. If you're sleeping, you're awake, you're busy, you're doing anything, the price will just hit you out. Now, let's come to buy. The futures contract is not, the futures trading is not like the spot trading. The spot trading, you can only buy, you can't sell. As in, what I mean buy is, you buy in a bullish market and also sell in a bearish market. But in the spot trading, you can only buy and sell later. What it means is, in the bear market, the futures traders are shorting the market and making money. But the spot traders makes money majorly when they buy on the spot market. So if there's a signal, let's say buy or long, all you need to do is come to where you see buy, you click on buy. Something. Yes, you click on buy. If it's a market order is instant execution. Let's say buy ADA USDT at 0.237. The moment you click on market and you choose to use you choose to use a certain percentage of your balance. All you need to do is come down to here. You see this arrow. You click, you turn it here. If you want to use 25%, if you want to use 5%, 15% of your equity, you just click here. It's 3.44. You click on long, but I don't want to take a long trade since the market is painting bearish signal. Then for leverage, leverage is you're buying the contract. You're using $3 to buy a larger amount of ADA since you don't have the money that is enough. You click on leverage. What this leverage means is if you're winning this trade, you're going to make times 10 of your leverage. And if you're losing the trade, you're going to lose times 10 of your leverage. So the higher the leverage, the higher your win. The lower your leverage, the lower your win. So it's a double-edged sword. If the market is going against you, it will go against you times 10. If it's going in your favor, it will go against you times 10. So you can adjust your leverage by either clicking on the plus button. You can reduce your leverage by either clicking on the negative button. Now, if you check, there are some pairs that are quite volatile. Pairs that are quite volatile tend to have lesser leverage opportunities. Let's look at ADA USDT. For ADA USDT, the highest leverage you can use is 25, is 50x. But there are other pairs that you can do 125x. Example.
You come to part of it, so you can see you have 125x. So what this 125x means is if you place a trade and the trade is going in your favor, you're going to make 121. Hello?
Yeah, we are with you. I can hear you clearly.
Okay, so you're going to make 125% of what you use as your leverage. You're going to make 125 times of what you use for your leverage. So it's advisable that for the beginning, as a beginner, you use a lesser leverage. I think what's recommended for beginners is 1 to 10x, 1 to 20x. But this leverage is also dependent on the amount of money you're using to open a particular position. Take, for instance, you're using $10 and your SL, your stop loss, is about 2%. What it means is if you're using $10 and your leverage is 100x, what it means is the market won't even get to your SL. Now, 2 times 100 is 200. So before the market will even get to your stop loss, you're out already. So you need to calculate the amount of money you're entering. Let's say you're using $10 to take a trade, for instance. And if your leverage is 2x, and your stop loss is 2%. Now, what it means is if the trade goes against you, you're going to be losing 2 times 2, which is 4. So you're going to be losing 4% of your $10, which is $4. But if the trade goes in your favor, you're going to be winning 4% of your $10, which is $4. When a signal is being sent, let's say I want to go long. Okay, let me just take a sell position for, okay, I have a trade running already. When a signal is being sent, you see signal like long or buy. It means you should buy the futures contract. And stop loss, okay, for a bearish signal. Now it could be stop loss 17,800. All you need to do is come to your stop loss section. Oh, my app is, my phone is, my app is misbehaving. Come to your stop loss section. You see here where we have TP and SL. Position, TP, SL. When you click on position, I'm trying to click on it, it's not working. But when you click on position, TP, SL, below it, you see take profit and SL. Take profit is where the analyst analyzed and said, okay, your first TP, it's going to be around 16,300. You go to where you have TP, you put 16,300. What it means is you don't necessarily need to wait. Sorry, you don't necessarily need to stay awake until you close your trade manually. Once price action gets to 16,300, that order will be executed automatically and the money will be credited to your futures balance. Then where you have SL, if you click on TPSL, where you have SL, all you need to do is to impute the figures. If the analyst said your stop loss will be 17,800, you go to where you have SL, you impute 17,800. What it means is if the trade goes against you, once price action gets to 17,800, it will close automatically by itself. So if you take a trade by 10:45 p.m. in the night, and you don't need to stay awake all through the night to close or take your profit. You just have to impute all those parameters in the relevant places. Once price action gets to that place, the trade will either be closed in profit for take profit, or it will be closed in loss for SL. So now, assuming you have a trade and you want to close your trade, you want to close bit by bit, all you need to do is you click on close. You click here, this Binance app is malfunctioning. It will show you either close 25%, close 50%, close 75%. You click on 50%, assuming you're trailing or you're locking profit, you're partialing. Some people have different ways of taking their profit. Once the trade gets to the first take profit, they click on 25% and take 25% profit and allow the trade to run. But some will prefer locking up profit, adjusting your SL to break even, from break even to the latest swing high or swing low for uptrend or downtrend, as the case may be. Then this is for buy. Now for sell, all you need to do is you come to here, you have the sell button, you click on sell, market order. Assuming the analyst said sell BTC at the current market price, as CMP, current market price. At that point, once you click on market, you take your arrow, you move it, you want to buy 10%, 5%, 15%, or you want to use all the money you have in your your balance, 100%. As you can see, the $34 is at 34.25, almost equivalent to everything I have. I'll click on sell. Once I click on sell, the order will be executed. Then after I click on sell, at this point, I will now have to come down and click on my stop loss and take profit. Once I click on this place, I'm going to input the parameters, just the same way I explain for the buy. Then, if you want to close all trade, all you need to do is click on close all. All your position will be closed. What I'm having here, minus 8%. If you click on this share button, you see this is called unrealized PNL. If you want to share your PNL with somebody, all you need to do is click here, and you can see either you save, you want to save it, you want to share more, wherever you want to send it to, anybody you want to send to, you have it here. But if you choose to save here, I've successfully saved it. If I want to share in Facebook, I'll click on Facebook, I'll share. But since I'm not sharing on Facebook, I need to come back. Then there's what we call the USDM futures, Coin M futures. But for the purpose of this training, I will just dwell majorly on USDM futures. The USDM futures is you have BTC and a stable coin, BTC USDT. For some exchanges, you see BTC USDC. Now, the Coin M futures, it's a combination of BTC. It's a combination of BTC and other pairs. What else again for this? Okay. So if you want to see your trade history, all you need to do is click on the envelope. You see all your open orders, your order history, trade history, transaction history, funding fee. If you want to cancel all pending orders, all you need to do is click on cancel and all the orders are gone. If you want to adjust your leverage, you can only adjust leverage if you are using a cross margin. Okay, now let's give it a trial. If I click on adjust leverage, I'm trying to adjust my leverage, but it's not going to work because I am already on isolated margin. You can only adjust your leverage if you're on cross margin. But if you're on isolated margin, you can't adjust it. Now, if you want to adjust your take profit and SL, all you need to do, you click on this box on top of the adjust leverage. It will now give you, okay, ahead. Thank God it has come up. Assuming your take profit is 16,000. What it means is once price action gets to 16,000, my estimated PNL will be 30.90. That will be my profit once price action gets to 16,000. But my stop loss is at 15. Okay, let me cancel the stop loss. If the stop loss is 17,500, you come to the stop loss section, you type 15,700. sorry, 17,500. Once price action gets to 17,500, your estimated PNL will be minus 2.0. That is the value of what you'll be losing if price action gets to that place. Now, most time when signals are being sent, as you can see, initially, I was having minus 7% or minus 8%. This is my unrealized, if you check on top of 0.91, it's called unrealized PNL. It will only be realized once I click on my close position. At that point, my realized PNL will be 0.91 cents. But if I'm on plus $3, plus $10, my realized PNL is going to be $3.6. I think that's all for, before I proceed to technical analysis, please ask questions if you have any. Then I'll be talking about difference between spot trading, and please ask questions if you have any. Hello? Hello?
Yeah, we are with you.
Can hear you.
No, we are hearing you. We are hearing you.
Please ask questions if you have any.
Okay, someone asked in the chat, please, I don't understand the realization part. Who is the person? Can you